Welcome to our webinar on total rewards. And total rewards is defined as the comp benefits and perks that companies offer that contribute to culture and engagement, recognition, and rewards that companies offer to their employees. So today we have an expert in that field, Jill Ayuso. Jill is a longtime executive in the total rewards field, and she's going to talk to us today about some of the things that we should be considering for 2018 in that total reward space that hopefully will help us hang on to our employees and continue to recruit new ones. So welcome, Jill.
Thank you, Valerie. Thank you for having me here.
You bet. So the first thing I want you to touch on is the economy, because the economy does have a direct impact on what companies can do for their employees. So tell us a little bit about that.
Sure. So let's talk about 2017. 2017 was a really good year for our economy. Inflation has been low and has stayed low for quite some time, which is really good, right?
Yes.
So far, the inflation rate has been the same at 2.1 since 2016. So that's quite a long time.
Yes, it is. Hope it stays that way.
Right. The dollar remains weak, even though our economy is good. So that's an interesting thing. When you think about the economy, you would think the dollar would be strong. North Korea has kept fairly quiet, so that's helped our economy and not spike any downward spirals of our stock market. Unemployment's at a 17-year low, which is very interesting.
Yes.
So as of January, we have a 4.1 U.S. unemployment rate.
Yes, very, very low.
Very low. And average hourly earnings has not moved in a very long time. It's been flat at $26.74 on average. Now, we want to look forward to 2018 for the economy. We've seen the stock market drop a little bit last month, which
A lot.
gave some alarm.
Longer than I would have liked.
Gave some alarm. The stock market normally has a correction about every 7 years, and there hasn't been a correction for quite some time. So we shouldn't be too alarmed. We want to watch it. And even though the economy has been very good for a long time, people are being cautious. So that's something to consider.
Right. I agree. And, you know, we hear about all the good things that are happening in the economy and with taxes and so on, but still companies are concerned about their budgets.
Yes.
Because most of the time in a lot of companies, salaries take up the biggest part of the budget. So trying to hold those steady is a challenge. So talk about budgets for this year, for 2018, and what's happening. What do you see there?
Well, we're not going to see much change, if any at all, in merit budgets. They're going to hold pretty flat, which is at 3% again. And that comes from SHRM, World at Work, Bloomberg, other agencies that put out survey information. You'll probably see tech companies and talent for tech jobs that are harder to find and keep give higher increases between 5 and 7%.
That's what
on average. So it'll stay about the same.
Okay. Well, now we have a new tax bill, and everyone seems to be pretty happy about that. Certainly corporations are benefiting from that, and their employees, hopefully. So talk about the new tax bill and how it's affecting compensation.
Sure. So the government lowered the corporate tax from 35 to 21%.
Significant.
It is significant. And so a lot of employees are thinking, well, why is the merit budget going to be bigger? A lot of companies are looking at what they're going to do, and one thing that they're talking about not doing is inflating base pay, because that means that that's going to be a long-term cost for me, and I don't want to spend all my tax break money that way.
Exactly.
Yes. So what we're seeing as far as compensation then is we've seen some give-backs. We saw some really quick give-backs. Walmart has been in the news about giving $1,000 bonuses, and they did increase their starting rate for new hires. So they didn't increase everybody's pay. So they did two things. And interestingly enough is when they gave the $1,000 bonus, it wasn't across the board. So they gave it to people who've been there longer. So newbies are kind of caught in the middle, who just started. They didn't get a raise and they didn't get $1,000. So that's how they chose to do a quick win give back. We've seen in the news other companies who have done bonuses to share the wealth. I think they did that is because they want to show their employees that, hey, we want to give you something right away because you've all heard about what we're getting.
Exactly.
As an organization, right? But I think from a compensation perspective, it would be very smart for organizations to take a step back and look at what are they going to do with the money. Stock holders, shareholders, they want the organizations to invest more in the company because I want to get more bang for my buck as an investor. Same with private investment and private equity owned companies. But I think the best thing for organizations to do is look at all the things that they could do with the compensation. And since this is a time when they would have the extra money, they might want to look at some corrective actions where it relates to compliance risks for compensation.
Ah, okay. So let's go into those compliance risks because we know they're out there with fair pay and a number of other issues. So talk about compliance risks.
Sure. So Lilly Ledbetter Act has been out for quite some time, and as we all know, there's still a lot of pay inequity across the country. You've seen and heard recently that many states have made it illegal for employers to ask what your salary history is to help them determine what they should pay you.
Yes.
And, because we've had this long history of pay inequity, it continues to perpetuate itself. And, gender is one of the biggest things. That's why the Lilly Ledbetter Act came out. So the organizations who have been audited, they're forced to make it change. They're forced to get rid of their pay inequity, and that's very expensive because now you're talking lawsuits.
Right.
You're talking immediate corrective action, so now I immediately have to spend a lot more money. This is a good time for organizations to really assess what kind of pay inequity issues do I have and how am I going to work on that before you have an agency come knock on your door or an attorney send you a letter, especially with the tax break. This is a great opportunity. I have some more pocket change. Let me think about, some things that I should keep myself out of the hot seat for, right?
Right. Okay. Very good.
Yeah.
Well, we've talked about compensation, but of course we all know that benefits also have a big part to play in employee engagement. And so we're going to talk about those benefits and what's going on in the benefit area because there are a lot of companies that are looking at a lot of different kinds of benefits to offer their employees these days for retention and recruiting purposes. So Jill, can you talk about what's going on in the benefits area and employee engagement and some of the surveys you've seen about why employees stay and why they leave?
Sure. Interestingly, I found a survey that a Boston-based recruiting firm did last year at the end of 2017. They were very curious to see what's going on with employers. So they surveyed employees, and about 430 employees responded. 52% of those said they were already looking for a new job.
Wow.
And then there was another pretty good percentage that was thinking about it. So they published some of their survey data, and the top 4 reasons for people either looking to leave or thinking about leaving, one was my manager, Another one was the company culture. Another one was pay, compensation. And then a fourth one was lack of development opportunity within my company. So it's interesting because some employees will leave for more money, or they'll leave for less money for a better culture, a better fit within another organization. Hey, I'm going to go across the street because company ABC, they've got some great things going on over there. Yeah, so I'm going to take a $5,000, $10,000 cut in pay. But you know what? Over time with my merit increases, I'll make that back up. But I know I'm going to be happy there, and I'm going to get some upward mobility opportunity because they have development programs over there. And my company here, yeah, they pay me really well, but I'm not enjoying my job. My manager's really tough, and I just have to keep doing the same thing over and over and over. Work, 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 hurry, hurry, hurry. It's that story that employees, they become disengaged. That's right. You're not promoting the engagement from those standpoints. So you talked about benefits, asked about benefits, and what are the other things that employers could be looking at from a benefit standpoint to help build engagement? As a total reward specialist and professional, I don't look at what I do as just paying people, giving them health benefits, and making sure that they're paid right. I look at total rewards as being one of the foundational areas in human resources as employee engagement and culture building, because it goes beyond what you pay somebody. Like I just said, what are the reasons that people are leaving? And I think companies need to look into that. You need to, if you're not doing it, you need to do some exit interviews. Find out what's going on. Are you looking at your turnover? Are you analyzing your turnover statistics? Because another thing that's really big is data. Data is powerful. It tells us there's an issue, or it tells us we're doing good in an area of an organization. So are you doing engagement surveys? So these are all ways to read and find out. There's information in the data, and then you can go look and find out, well, why are our employees leaving? Why don't we have good engagement scores? And then some of that information also would be benefits. What is company ABC across the way that I'm losing my people to offering that I'm not offering in the form of total rewards and compensation? Because at the end of the day, it's not all about my paycheck.
Right. It's about a lot of things. It's
about a lot of things. Right. That's why I love the word total rewards. That's has come out in the last 5 to 10 years, and not just calling it compensation and benefits. How else are you rewarding your employees? What kind of reward programs do you have? Do you have a recognition program?
That's big, recognition.
And how does it work? Do I just get a pin and a tchotchke because I was here another year? Those aren't so powerful anymore. Oh, thank you. I really appreciate you recognizing me for my work anniversary. But there should be other recognition rewards about what is my value to the organization? What do I offer you, and how do you recognize me for my value? There's some great reward programs out there about ideas, right? Who has the best idea in the company? It's not always the CEO and the top people. They have good ideas.
Yeah,
That's what they get paid well for.
I don't have all the ideas.
But it's our people on the ground. So why not implement a reward program where I'm going to share the wealth with the people who came and said, hey, I got an idea. Why don't we try this? Have you thought about that? Because my friend over at EFG company, they just did this. And my friend got some money for it. And the company made a whole lot more money. So those programs are very important to employees because it's a great way to have a win-win situation and share the wealth. Let's talk about what companies could possibly look at doing with sharing some of that give back from Uncle Sam and the tax cut. So some companies are looking at doing an increase to their retirement plan match.
Uh-huh.
Some don't want to do an increase. They would rather do a discretionary, an extra match, if you will, because it's a one-time.
Right.
Other companies are looking at wellness programs, which is a good program to have. We want our employees to be healthy and feel good.
Right.
Because if you have employees who are not so healthy and they don't feel good, they're costly in so many ways.
Very, very costly.
And how are they costly? Well, I'm not as productive when I'm at work.
If I'm at work.
If you're at work, that's another thing. How much time do they take off because they're not feeling good? And then it's a stick approach. I get penalized because I'm sick and I'm taking my sick time. But the other thing too is if I'm feeling better, I'm more productive and I'm happier. So I'm going to be a little more engaged when I'm working, right? The other thing too is keeps your medical claim costs down.
That's right.
When you have a wellness program implemented as part of your benefits that they're offering them. And they can be expensive, but if you put them in segments or phases, if you will, over time, it can be better for your budget. And then as that happens and your wellness program gets indoctrinated to your culture, right? Now we're building culture, because why do some people leave? They don't like the company culture.
Right.
Now the employee goes, well, I understand why you're doing this and you're trying to help me improve my own being. So, company, you value me, and that's how they look at it, right? There's loan repayment benefits that have been pretty new in the last 12 months.
Oh, really?
And
what are those?
Those are interesting. Actually researched it and talked to a couple of outside companies that are vendors that would help an organization set this up, so it's very low maintenance on the administration side. So a lot of companies offer sign-on bonuses to attract talent. Why not change that spend into something a little bit more meaningful for the newcomer that you're trying to attract? And if they have been recently in school, graduating, they're going to have a loan.
They are.
So what you can do as an employer, instead of spending that sign-on bonus money, is offer them an opportunity to help pay their loan sooner. They don't stop paying their loan. You're adding to their loan payment to pay that down much sooner. Now, how much happier and more engaged is that new person going to be
Exactly.
coming into your organization?
Less stress.
Yeah, less stress, because they're going to be much sooner out of debt, right?
Yes,
So talking about wellness, there's also financial wellness.
that's true.
So a lot of companies have retirement plans, and unless you have an auto-enrollment type of plan, most employees say they can't afford to put money away in the retirement plan. A lot of them will even give up free match money. It's free money,
That's right.
right? So what I've found in organizations is to partner with an outside company that is licensed to do financial planning, and they'll come in and do it for free. They won't even charge the organization. And they can do one-on-one financial planning with your employees. Because if you leave it to a room of people, you know, you can do a lunch and learn. But the statistics, because I've done them, the statistics show they'll come and listen, but they won't act. They'll say, yeah, it's a good idea. And a lot of times it's because people, they're afraid of the big words. They don't understand all these financial planning terms. So they're afraid to approach that person. But if you help the employees to make appointments, have that person on site on a regular basis, it works really well. Because what they do is they help the employee learn how to budget. What does that even mean, right? Because that could be a scary word for people. And then they teach them about financial planning for many reasons. One is, are you properly protected? And then they utilize the company's benefit offerings to actually have them sign up for a lot of those voluntary benefits, the life insurance and other things. And I have seen a lot of employees come and thank me for those programs being set up and really helping them to go sit down with that planner. It's changed their lives.
Well, otherwise it's too easy to live paycheck to paycheck.
Exactly.
And not think about where your money goes.
Exactly. There's other programs like work from home or flexible work arrangements. I mean, let's face it, everybody wants a culture they can work in where they're valued and they can have some flexibility. At the end of the day, what do managers want? They want the work to get done.
They want the work to get done. They want productivity.
Right.
Yes.
So
What
why?
difference does it make where they do it in some cases?
Or when they do
Or when
it.
they do it, right.
There are a lot, not all jobs, but there are a lot of jobs within an organization where you can offer this flexibility,
Right.
flexible work schedule. I know myself as a manager, that's the way I've always worked with my teams. You know, you don't have to be here from 8 to 5. If you're hourly, you need to have,
Sure.
the right schedule and work your 8 hours, make sure we're compliant in your lunch break. But it doesn't matter if you're a person who has kids and, you can't be late to go pick them up, then come in earlier, leave earlier.
Right.
And as long as you can be flexible with me on the days where I need you here for this later meeting, can you, and I give you notice, it works out really well. See, that's all about this engagement and building a culture, right? That's what people want. And at the end of the day, they'll take less pay for that.
Exactly, they will. I've seen that happen.
Right?
Yeah. Well, that's an interesting discussion about how things have changed, because I know things were a lot more strict and by the book 30 years ago, and now the demands are much different, and you really have to think about that, because you don't want to lose good people because you don't have the right structure. Which brings me to sort of the end of our discussion. Tell us about what advice would you give the participants out there about what they should be really thinking about for 2018?
Well, I think there's a lot of companies that are at different stages in their approach to employee engagement and building a culture. None of these things happen overnight. So there needs to be a strategy and a plan put in place. But as they build the strategy and determine what's the rollout plan and what's the cost, need to determine, let's not take too long to get these important things started for our organization. Looking at risk factors that need to be handled, and then looking at these other areas of benefits and putting them into place. It's really important that companies consider what's going to work for them. It's not one size fits all.
No, that's true. Everybody's out there trying to emulate like Southwest Airlines culture or Google culture, but they've been doing their culture for years.
Exactly.
And it's very difficult to emulate. So I agree with you that every company's different, needs to know how to approach, how to build their culture or keep their culture.
Right. The other thing that I think is really important as companies are looking at being more forward thinking and not being old school like you were talking about,
Yes.
so rigid, they need to be forward thinking, and there's a lot of technology tools out there for them. Yes, they're expensive, but the return on investment is worth it. I also firmly believe that when you're building a strategy and a plan, that you have to think about, is it functional for your organization? Because you can draw this nice, pretty picture. So structurally, you've got pretty form, and it sounds great. But is your rollout plan functional for your organization? And I've seen firsthand, been involved with organizations, is that's where they meet failure. And they don't move the needle forward in building the culture and the employee engagement that's needed.
All right, well, thank you so much,
Yes,
Jill.
thank you for having me.
We certainly appreciate all your good information, and we hope that everybody can benefit from this webinar. Thank you for participating.
Thank you.